Hello, everyone, and welcome back to our channel. Today we're diving into a comprehensive financial analysis of ZIM, ticker symbol ZIM, one of the major players in the global shipping industry. Whether you're a seasoned investor or just starting out, this high-energy breakdown will give you all the insights you need. Let's get right into it. First up, let's talk about where ZIM is trading today. The latest stock price is hovering around, insert current price, reflecting recent market dynamics that are a mix of bullish optimism and cautious sentiment. Compared to its historical highs and lows, ZIM's current performance shows signs of recovery from previous dips, while also capitalizing on recent global trade trends. Key drivers include fluctuating fuel prices, supply chain adjustments, and evolving global trade policies, all factors that have been pushing the price up and down in fascinating ways. Now, let's break down some crucial financial ratios that investors love to watch. 1. P/E ratio and forward P/E. ZIM's current P/E ratio indicates how much investors are willing to pay for each dollar of earnings. 1. The forward P/E gives us a peek into future expectations. If these are lower, it might suggest growth potential. 2. Price/free cash flow. This ratio tells us about the company's ability to generate cash after capital expenditures. 2. A healthy figure here points to solid cash management. 3. EPS growth. Earnings per share growth is a key indicator of profitability trends. Steady growth here is a positive sign. 4. Return on equity, ROE. A strong ROE reflects efficient management and profitability relative to shareholders' equity. 5. Debt to equity ratio and current ratio. These ratios provide insights into ZIM's leverage and liquidity. 5. A lower debt to equity ratio combined with a robust current ratio suggests that the company is managing its finances prudently. In essence, these metrics collectively paint a picture of ZIM's financial health, highlighting its operational efficiency and growth prospects. Let's move on to technical analysis, specifically support and resistance levels. Currently, ZIM is showing key support around the insert support level mark, a level where buying interest tends to pick up. On the flip side, resistance is emerging near insert resistance level, where selling pressure might intensify. These levels, coupled with the current momentum, are critical indicators. When the stock price tests these areas, it can signal whether the trend is gearing up for a bullish breakout or if we should be cautious of a pullback. Technical indicators like moving averages provide another lens to view ZIM's trend. Here's what we're looking at. 1. The 20-day SMA is giving us a snapshot of the short-term trend. 2. The 50-day SMA reflects a more intermediate perspective. 3. The 200-day SMA offers insight into the long-term trend. When the 20-day and 50-day SMAs are trending above the 200-day SMA, it typically signals a strong uptrend. Conversely, if these shorter-term averages fall below the 200-day mark, it could indicate emerging bearish pressure. For ZIM, the interplay of these averages is key to understanding its current momentum and potential trend reversals. Next, let's dive into ZIM's most recent earnings report. The report highlighted 1. Revenue growth. A solid increase, driven by higher freight volumes and improved operational efficiencies. 2. Net income. The bottom line saw positive improvements, underpinned by cost management initiatives. 3. EPS beat. The latest EPS came in above analysts' expectations, suggesting that the company is not only meeting but exceeding market forecasts. This strong earnings performance underscores ZIM's ability to navigate challenging market conditions while still driving growth. When we compare ZIM to its industry peers, a few things stand out. ZIM's strengths lie in its global network and efficient operations, positioning it well against competitors. However, like many in the shipping sector, it faces challenges from market volatility and regulatory shifts. By keeping an eye on these dynamics, investors can better understand where ZIM stands in the competitive landscape. Analyst sentiment is another important piece of the puzzle. Recent analyst ratings for ZIM are mixed, with several experts rating it as a buy due to its strong earnings potential and strategic initiatives. Price target forecasts range broadly, from conservative estimates to more aggressive upside potentials. Keep an eye on any recent upgrades or downgrades, as these can significantly influence investor sentiment and the stock's direction. Finally, let's cover the news and events that could sway ZIM's stock price. Upcoming earnings reports, potential mergers or acquisitions, regulatory changes, and broader macroeconomic trends all play a part. These events can inject volatility into the market, so staying informed is key to understanding short-term price movements and long-term prospects. So, what's our final verdict on ZIM? Based on our comprehensive analysis, from robust financial ratios and technical indicators to strong earnings performance and a competitive industry stance, ZIM presents a compelling case. For investors with a higher risk tolerance looking for growth opportunities, it could be considered a strong buy. However, if you're more risk-averse, it might be wise to hold and watch for further confirmation of these trends. Remember, every investment decision should align with your individual risk profile and financial goals. This is not financial advice. Always do your own research before making any investment decisions. Thanks for watching. If you enjoyed this video, hit that like button, subscribe for more in-depth market insights, and share your thoughts in the comments below. Until next time, happy investing.